And good afternoon. Welcome into Market Talk on this Tuesday, April 26th. Great to have you with us once again. I'm your host, Jesse Allen. Find us online. MarketTalkAg.com is our home on the web. MarketTalkAg.com. You can find our social media links there, all of our streaming sources, and much more. It's all online. MarketTalkAg.com. Well, as we take a look at the market trade today, got plenty to discuss, but looking fairly solid across the grain sector on this Tuesday. A little bit to discuss with the livestock markets and also watching the stock market. Take a bit of a dive here today. Let's bring in our good friend Bill Biedermann with agmarket.net joining us here today to talk through the markets. And Bill, great to have you back on, sir. How are you?
Doing good, Jesse. You're right. There's a lot of macro things happening, probably more over than the micro as far as how it's affecting the marketplace.
Yeah, let's talk about that just right off the top before we really get into the grain side of things. The stock market today just really under some pressure. The VIX rallying back above 30 here. I mean, the tech sector kind of leading the sell off, and we watched the dollar as well posting fresh 2-year highs. So I mean, you look at some of these macro factors, Bill, and what are you watching the most is how it's parlaying into our market trade here this week.
Well, I think the biggest factor right now is the fears of a slowdown economically in China and the effects of the COVID. I mean, if you look at what the Hang Seng market has done, which is in Hong Kong, of course, they've dropped 26% since February. And the Shanghai index in China has dropped 22%. We dropped 3,000 points in just the last few days. So there is a real intangible effect to the risk off that these New York money managers are going through. Some of those guys might be selling commodities just to manage their margin call risk on the stock side. Some of them might just be taking, and probably the smaller traders taking the risk off. Just get me out of everything. I want to kind of take a break and see what's going on. So that's kind of a macro impact. The other impact of that, Jesse, is that the dollar in China, the yuan, is really losing ground, which is great for their exports, but it makes all their imports more expensive, which of course is grain. So you've been seeing them front loading some bean purchases lately. We've seen a lot of purchases. We've seen a couple of huge corn purchases from them. Very encouraging to see. But if they front loaded them for the next couple months and now we've got a cheaper South America product available, it kind of creates a void in the next few weeks in front of us, right at the same time when we are seeing planters in the field, albeit not very many, but we're seeing pictures of planters in the fields. And so, the New York money might be going, wait a minute, you didn't tell me they were going to plant the crop this year. And I'm seeing all this going on in China, so I think I'm going to sell out of some stuff. I think that's the seasonality that we're in these grains right now. Very choppy. Mm-hmm. We want to be bullish on weather, but it's too early to be bullish on weather. We're getting it planted. We've got China problems. I better sell. Next minute I'm buying because I saw a dust bowl out in Nebraska. That's what's going on.
Well, on the weather front, like you said, it's a little too early to get too worried about it and too bullish. But I know your colleague Jim McCormick retweeted the midday GFS model, and a lot of these same areas that have been getting precipitation lately, looking to get more again here this week. More snow on the northern plains, more rains in the eastern Midwest. Bill, I mean, we look at crop progress: 7% planted on corn, 3% on beans. It's still, I mean, we're behind the 5-year average. We're really going to need a good window to open up here to really get some planters rolling.
Yeah, we are. And yet in the I states, we really did make some decent progress. So these outlier states are really the issue. But, you just take a couple states like North and South Dakota, you're pushing, 9 million acres. You throw Nebraska in there, you're at 18, 19 million acres. I mean, we're talking about some pretty large producing states, even though we don't normally think of the Dakotas as large producers. You add them together, it's a lot of acres. So, let's just say that they have another 2 weeks of planting delays, and so they got to slam it all in real quick. It's not going to go in the greatest conditions. It's going to go in a little bit about a week later. So the point is that maybe we're pushing that record yield potential off of the table. if we do that, Jesse, you've got a real serious math problem. Even if we increase our acres to 90, but we only end up with the same kind of a record yield as we had last year instead of the 180 that everybody's projecting this year. Carryover, the way we're projecting it, will be below a billion bushel, which is below what the government has proved to us be pipeline requirements. So we've got a math problem in the corn, really until we get through a whole production cycle with another South American crop coming in, which is a year from now. This corn market's going to be on the edge and evaluating where we're at and we may have to do some price rationing. We don't know yet, but we very likely will run into that scenario.
On the soybean side, it looks like maybe seeing a little bit of that meal oil spreading here today. Bean oil strong with the palm oil ban out of Indonesia, and I know as well watching the soybeans with the COVID lockdowns in China. There's some worry about demand there from the Chinese. What are your thoughts on the soybean market right now, Bill?
Well, I think with the Indonesia, it's funny because yesterday Indonesia was saying, well, we're only going to block exports for 2 months. And so the market sold off dramatically, had a huge range sell off. We've had a $5 range in the bean oil in just 2 days. That was a buying opportunity because reality is they are shutting down exports. And reality is all of the Asiatic countries are humongous buyers of oil, regardless. That's a main ingredient in their food staples. So that was a buying opportunity. You add into that the possibilities of biofuel demand as we move closer and further into the disaster that this Russian war is becoming. So, the oil was a buying opportunity, and crude oil, same thing. When we sold off, if you weren't watching that market, you should have been buying some diesel because that was a buying opportunity. So that's back on track to run higher, and that's going to probably provide a lot of support to commodities. But again, we got to get through this risk-off fear that's driving the market right now. The stocks are down another 600 today. So, the sell-off we've had from just 4 days ago when we were trading at 35,400 on the Dow, and today we're at 33,300. And those are some big swings in equity.
Very, very true. Wheat markets here, Bill, they've been the leader here on the day Tuesday. We got those poor winter wheat ratings again. I know as well around midday, Stats Canada came out, reported a 7.2% increase in wheat acreage this year. So that maybe took us a little bit backwards, but not much. This wheat crop looking pretty poor. And then, of course, you throw in the planting delays in the northern plains. A lot of worry about what's going on in wheat right now.
Yeah, you can't be a weak trader in this market. You've got to realize that you got to be buying breaks. The only reason we sold off the last week in the wheat market was because Russia lowered their price because they need money and they're selling what they got cheap, giving it away. And so, get through that and get over it because we've got some serious, serious problems. I had one customer who's a fairly large wheat producer out in Kansas. He called yesterday and he says, we just used up 8.5 lives. So we're almost to the 9 life cycle of a wheat plant. It's serious. It's bad. I think that by the time we get into 6 to 7 months down the road from now, when there's still shipping logistic issues coming out of the EU and the Black Sea, we're going to have some problems that we can't even imagine. So, you just buy breaks.
Definitely. Looking over at livestock, this cattle market, kind of choppy here today. A little bit of movement higher in live cattle. I know, cold storage report, freezer stocks of beef at a 9-year high. With the stock market moving lower here today, maybe that's helping out live cattle. What's your general thoughts on what's going on with this cattle trade here as we get going with this week?
Okay, well, yesterday we had the shock and awe reaction to, a livestock report that I believe, and our cattle, we've got a couple of really good livestock analysts on our team, but, they really don't believe those numbers were as accurate as we'd like to see them, and that the numbers really won't come out as high as what we were when we go to slaughter those things down the road. So the cash market's already started to take off. As you probably are aware, the Western Belt is really on fire for cattle. They're trying to reach out, they're pulling them early, products on fire. So I don't see any reason why a guy shouldn't, be buying this break, from a speculative standpoint, I'm talking purely. There's reasons to be bearish, like what we were just talking about with stock market, with China. China maybe slowing down on some beef imports and things like that. Those are real concerns. But in the overall supply side and the overall inflation side, inflation dollars versus where we're trading, we could move higher once all that emotion gets out of the way.
And I think a lot of those same things you mentioned could be part of the case in the pork market as well. A little more follow through from yesterday's sharp day down, and some of those worries about demand from China, inflation, et cetera, kind of spilling into that hog market as well, Bill.
Yeah, and technically, both markets have some technical formations that could threaten the market to sell off a bit. So we got to get through those things. Once we prove that the technicals are done selling and we've got support, this market going into late summer has some good fundamentals under it.
Well, Bill, we covered quite a bit here, a short amount of time. But again, looking at the markets today and just looking at a busy time of year for farmers with spring planting, presumably, if we get in the field, what are some thoughts, final thoughts you'd have for them just to think about with their marketing plan as they move into a busy time of year?
Yeah, so you really need to look at your balance right now of your risk bushels versus your fixed bushels, and you look at that as in total dollars per acre, and then you average that out over the whole farm, and you do a matrix of low price to high price where we end up in the fall. Make sure, we're at a great price. You can lock in. We've been locking in $300 to $400 per acre over all costs, and keeping the upside open on like 80% of those bushels. So it's a win-win deal. If the market falls apart, okay, so we only make $400 an acre, and if the market takes off and keeps going, we're still gaining on 80% of it. So, all right, so now we can make $1,000 an acre. I don't see. There's not a difficult decision in that for me. Maybe there is for other people, but I'm not a greedy guy. I want to stay in business. So I think a guy needs to really seriously look at that. And if you're not, well, then put yourself in the I'm a Kenny Rogers gambler kind of guy, which is okay. I'm not judging anybody. I'm just saying that if you're managing a business, if you got hit by a train tomorrow, which I hope you never do, but how would your family be organized financially? And in these kind of markets, you can organize it so it doesn't matter what happens. You're going to have a great year.
Well, Bill, if folks need a little help organizing and making some of those decisions with their operation, I know they can reach out to you and the team there at agmarket.net very easily and get some help from you guys, can't they?
Yeah, we'd love to talk to you. And, we've got guys that do counseling. We got guys that do brokerage. Either way, it's 844-4AgMarket. Just go to our website. That's easy. It's agmarket.net.
Agmarket.net. You heard it there. It is the easiest spot to find all the information. With that, Bill Biedermann with agmarket.net. We appreciate the time on this Tuesday, sir. Have a great week. We'll talk to you again soon.
Okay, thanks a lot.
Bill Biedermann with agmarket.net joining us today on Market Talk. That's going to do it for the show. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.